Good morning, everyone. I'm just checking if the sound is working before I click on the record button here. So if you could, oh wait. Welcome everyone to live webinar, strategy webinar with Admiral Markets. We're going to take a look at Forex, commodities, and stock indices. Using momentum and correction today, that is our focus. First of all, though, I want to talk to you about two disclaimers. First of all, this webinar and later on recording is shown to a global audience. Take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if it is suitable for you. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer. Plus, you are aware of the risk involved when trading. So today's focus is using the concepts of momentum and correction. Basically, this is the heartbeat of the rhythm of the market. It is always making either a momentum or correction. And of course, we can look at corrections to understand chart patterns. We can use momentum to understand how far a breakout can go, if it is a good breakout, and etc. So there are a lot of things we can use, very important concepts. And of course, if we start to label momentum and correction, then we're doing wave analysis. So just by doing, understanding momentum and correction, you are becoming a half a wave analyst by simply just looking at the market structure. So that's a great benefit and a great value, I think, as well. All right, we're going to be, of course, in this trading room talking about momentum correction. It's part of step one. Step two of, typical trade plan that I look at in these webinars. Step two would be looking for opportunities to trade in the direction that I like based on point one. The third step would be to look for filters if anything is making the trade less appealing. And the fourth step is basically to look for a trigger in the area that I want to trade, basically, and then establish what the reward to risk would be. All right. With that said, let's take a look at the calendar. We have basically, let's see, ADP today on the US, that's for sure. By calendar, you can just go to admiralmarkets.com, click on analytics, and go to Forex Calendar. Now I'm showing you actually the webinar schedule, and if I'm there already, I might as well show you that tonight, Nena's going to take a look at naked scalping part 2, and tomorrow we're going to take a look together at trading Renko bars. Regarding the calendar, we have ADP today for the US in the New York morning. We have Thursday, tomorrow, Bank of England, and it's going to be close. Will we get a decrease or not? Some are saying maybe it's too soon. Some think it's needed. I guess it's a difficult call, I would say. But at the moment, probably slight preference for yes. I had a poll yesterday on Twitter, and there was a slight preference on no, but bear in mind that there were only about 80 responses, so it's not a big sampling. Regarding other news events today, we have ECB monetary policy meeting and PMI. We got a lot of PMI figures actually coming up this week today as well, so something to analyze that could be interesting. All right. Let's pull over the charts here. And let's talk a bit about momentum and correction. And we're going to analyze live charts and markets, of course, as we go along. First of all, I want to start with explaining the dollar yen that we were talking about yesterday. And I'm curious if anyone traded that by any chance. Did anyone trade the dollar yen to the downside? And if yes, what was the result of that trade? I would like to know. Hopefully it was good, because we were talking about the dollar yen and other euro dollar too, and how to tackle it. And yesterday we were looking basically at momentum to the downside and looking at this correction taking place. And we were saying that basically this correction could be a start of a bigger retracement, but then price would have to not break this flag, it's a bear flag, and have to break the top. Actually, well, maybe break it, but to the top, and not to the downside, right? So this bear flag or this channel was the key factor in either trading it to the up or to the downside. A break basically of that channel lower would indicate a follow through of this momentum. A break above that channel could indicate a new momentum direction, a new trend direction. So if you look at this downside, you see clear momentum candles. Those candles are relatively large to the downside. The candle closes are near the low. The majority of the candles are bearish, and the few bullish candles that are visible are small indecision candles that typically have little impact, not breaking the highs most of the time. Most of these candles are showing lower lows as well. So that's typical. It's typical of a momentum here. And you can see if we zoom out a bit more, you see a trend, because why? We see multiple momentums pushing that direction in a row, and all these upsides are relative corrections. All right, that's the definition of a trend. A trend is when you connect multiple momentum pieces and multiple correction pieces. Right. One of these pieces, if you only look at this piece, that is one momentum. Right. But if you connect multiple ones like that, that's when you start to see a trend. A trend is nothing more than basically momentum correction, momentum correction, momentum correction in a pattern like this that is connecting, that you can connect into a channel, for instance. But that is a trend. It's multiple pieces of momentum and correction. If we look at one single piece of that, that would be a momentum piece. So we had bearish momentum yesterday. That's not necessarily a guarantee that price will continue lower. As I said, there was reason to believe that there could be a bounce. There was a 61.8 fib right there, right? And that could have been a bouncing spot. If we broke the channel, there was reason to see a space to move up to the resistance trend line. But yesterday we got the break to the downside. I was looking for a relative good candle that was breaking through this channel, and we just got it. We did get it. We take a look at this candle right now. Basically, the high and the low was about 109 pips. The close was about 28 pips away. So, if we do a bit of math and we divide 28 by 90, hang on. No, wait, high and low is a bit more than, it's actually 110, excuse me. All right, 110, I was miscalculating as far as I can see. 28 divided by 110, let's see, 28 divided by 110. I'm trying to use my calculator here quickly. All right, is 25%. 25% of that candle was wick. Now I was talking about yesterday that the wick cannot be more than 30%. Otherwise, I would not be trading it. So 25% is less than 30%. 30% was the border. If the wick is more than 30%, the candle is indicating too much indecision. So that was my trading plan, said pre-fact beforehand in yesterday's webinar live. So that was my idea. So if you thought that idea was interesting and you perhaps made the decision for yourself to do the same, then that trade worked out very nicely. As you can see, it just qualified. The candle breakout was good enough. It clearly broke this bear flag. We have momentum prior to it. So this is how momentum correction helps us. Momentum, correction, breakout. And we know that could be an interesting trade. The breakout candle was good. So what I said was put a fib on the candle and then look on lower time frames, or on this time frame even, to a pullback right to the 38.2 fib. That's what happened. So in a 5-minute chart, you'll see that a bit better. All right, and you can see that here on this 5-minute chart, we have momentum, correction, momentum. And I was saying, I'm not going to take a pending order because I want to see a corrective pattern, preferably on a smaller time frame, it is possible to just to stick to the 4-hour chart, put a fib on that 4-hour candle, and wait for a retracement, right? But another way is to zoom into a lower time frame and basically look for a pullback or a pattern here. Now we got that pattern. It was not a bear flag. It was actually a rising wedge. Look how price basically makes a correction exactly as we were talking about. Hits the 38.2 fib, turns at that fib, breaks the pattern, and starts falling. And the target we had in mind was 107.70, and that's exactly where it went to, 107.70. And the reason for that is, by the way, because of the following. And the reason for that is because we had a fib from here to here, and you can see that price stopped at numerous fibs already, and basically was looking for, sorry, I don't think this is the right fib. That's it. All right. Good. Stopped at numerous fibs already, 38, 23.6, 61.8. And the next fib upon the break of that bear flag was the 78.6 fib at 100.73, and I was saying 100.780 is better just to give a bit more space. So that breakout or bounce was good for 100 to 85 to 100 pips, depending on where exactly, and it was a very quick fall after that. All right, so that's why I'm curious if anyone took that trade. Now, if not, no problem. And the reason why I'm emphasizing this and staying on this chart and explaining it again is not to make me boost my my idea here. It is just to show why you can use these concepts, why they're beneficial, and to give you confidence in how discretionary analysis can be used, can benefit you, and reduce, maybe take away some fear and stress. Just to show an example, pre-fact, why it worked, what things we said, and how it developed, and etc. To rehash, basically, to repeat and review what was said and how it played out. And so it was, from this point of view, a classical textbook breakout trade setup, and worked very well. All right, so let's move on. How about the blue candle on July 28th? The blue candle on July 28th. Let's see. You're looking at daily, probably, I guess. What the time frame are you looking at? Z10? This 4-hour chart, maybe? Not sure. Z10, let me know, okay? Because otherwise, oh yeah, this one? Okay. This blue, well, that, you're going to have basically two types of corrections. You have corrective corrections and momentum corrections. You also have two types of with the trend movements, momentum and corrective trends. So basically, those look like this. If you have a trend, but price is moving fast, those are impulsive trend continuations. But sometimes in a wave 1 or wave 5, right, price starts to slow down. It's still moving with the trend, but it slows down. You can see that sometimes as a corrective kind of trend continuation. Also, the opposite is true. You can have corrections that are going sideways, passive corrections, and the moving average basically catches up with them through time. Or you could have impulsive corrections where price is making an ABC zigzag and actively retracing back to the moving averages. Actually, the impulse here, the momentum, is against the trend. Let's say the trend is bigger to the upside, right? The trend is up, but the impulse, the momentum, is down at this point. All right, so that could be a reversal, but it could also be simply an impulsive correction. And so sometimes you'll see stronger bullish candles in an overall downside because it could be an impulsive correction. If on a lower time frame, like the 50-minute chart, or maybe even an hourly chart, let's take a look where it is exactly. Here, all right, that's the 26th. So we have a line there. Let's go there. All right. You can see that you got this is a momentum on its own as well. This was momentum, but it's followed by a counter momentum to the opposite direction. And you can see the first part here, momentum, there's a bit of correction within that, and then a follow through. And it looks like an ABC zigzag, although we don't know that at the point. It could be a 1, 2, 3, 4, all right, as well. In retrospect, we know it's an ABC. When we're trading this live, we don't. And one of the differences, one of the main points we know when there's a difference is larger context, confluence, support of resistance, just using kind of other concepts to gauge that. But also, if this is a wave 4, then we would see a break of this triangle to the upside and not to the downside. Once this triangle breaks to the downside, specifically when price enters the territory of wave 1 here, we know that this is most likely an ABC, and indeed after that, price does make a follow through lower. So these are kind of important spots of levels of determination, which we can understand what is going on here. Is this an ABC zigzag, or is this a bigger reversal to the upside? We might have our analysis might make at this point an estimate that an ABC seems more likely, but the confirmations are here and here basically of that. So that 4 hours, this 4 hour upside is indeed relatively quite impulsive compared to this correction and this correction. You're right on that. Those are typically passive corrections, all right? Whereas this one here was a more active correction. This is typical passive correction. It's a bull flag. All right. So I hope that's clear. Your dollar basically was looking for a continuation, and we got the continuation. We got the good breakout candle. We got a retracement of that candle and a follow through. Unfortunately, price did not reach my target of 78.6 fib. It was a very, very slow day under your dollar to the upside. It actually only reached the 61.8. I did think it could be a pausing spot, but really there was hardly any push on the euro dollar. It was some push from mid candle here. This was a good breakout candle, and it retraced halfway, and it did push some 40 pips up to the 61.8 fib, but hardly any, relatively a small move, obviously, and price, as expected, respecting the 61.8, but not breaking above it, which I was hoping for, so that we could get a bigger move up. That does not necessarily mean the end of the upside. We could still be actually in an impulse to the upside. When you see these moving averages, everything is still bullishly aligned. So there could be today, tomorrow, still that push up to the 78.6 fib. And this could just be a retracement for more upside. So I think for the moment, you can see it's, on the 1 hour chart, there is some momentum actually taking place. And I think we could put a fib from here to here. You can see price retracing to the 38.2 fib. So the 61.8 target, that could be a bouncing spot. Basically, anywhere as long as price stays above, I would say, this little zone here. Obviously, this was a consolidation, and now basically it could act as support. All right, so as long as price does not break the zone, let me get rid of this fib here. It's a bit too crowdy. All right, the 78.6 fib is at 113.15, but I'll take it away for now. All right, yeah, basically, yesterday's low is key. We got a couple of good bullish candles here, indicating momentum to the upside. As long as we don't break the low, I think that the bulls are still in control, and this is just a retracement. And this is most unless price moves up and shows some bearish daily candle. My view is still bullish. I'm expecting a retracement and follow through to the upside. It does not have to be today. It could be tomorrow. Now, if that bullishness does not happen this week, I'm going to reanalyze this because then it's taking too long. I would expect the follow through to happen, not 2 weeks from now, right? Because if it goes, yeah, it probably would not happen anyhow. But let's say if we get an indecision candle here and then a doji and then another doji, then that's showing significant, indecision basically, and it can still break to the upside, but I would want to see it break, and I wouldn't want to be in that trade anymore on a pullback, if that makes sense. All right, so that's what I'm saying this week. So from this point of view, we also have divergence, by the way, between these tops. And yeah, the 4 hour could see a significant retracement. I probably would want to see a sturdy retracement, maybe even all the way back to 111.50. I think that, yeah, let's see. It will probably make it a decent retracement here, I would say. All right, but this one is a bit more difficult, I think, because I'm not sure how this correction is going to take place. Whether this is going to be a first part, for instance, of a correction, and we get this, and then one more correction down. In that case, I would put a fib from here to here. And price could stop at the 61.8, move down to this target, and that could be the bouncing spot then. So what could happen is in London, it could start up. Throughout the day, it could move down. End of New York, it could bounce. Asia session could see it move up a bit like this. And then tomorrow, before a European Open, it could start moving up again. Something like that. Just to give a rough ballpark figure here, what could happen. So I don't think it's a good moment to trade it to the upside now. Not to the downside, because I'm still bullish. So for me, it's waiting time. For me, I would like to see price lower. After an ABC zigzag would be good. Alternatively, if price doesn't make that bigger retracement, but if it does, let's take a look. I would probably need to see a bullish candle that basically breaks above this high. That's the only way I think I could trade it to the upside right now. If it breaks through 112, what is it? 112.30. All right. If the close is above it with a close near the high, good 4 hour candle. Then look for retracement of that candle to the 38 fib, and then look for continuation up to 113.15. I think that will be the only way for an immediate upside. In that case, it looks like it's continuing right now. Otherwise, I am expecting ABC and waiting for that ABC to finish at the target before trading up. If it breaks through yesterday's low, the whole thing is invalidated. If it doesn't happen this week, again, it's not valid. On the same token, the same idea I mentioned yesterday is still valid. I think that if price will react to the 78.6 fib, I do think that will be a bouncing spot, and I think it could be good to look for swing trades at that fib and look for bearish bounces at that level. Another reason why I expect a break to the upside and not a strong respect for the 61.8. Yes, on lower time frames we saw price stopping at this fib as it typically does, but on this time frame we see that although we have a high right at that level, the close was near the high. This is a pretty decent momentum candle, and I think typically when you have a candle like this, there's a good chance you'll see follow through to the next fib. And if there's a candle with a substantial wick at this fib, then that fib is probably most likely going to be used for a bounce. Looking at the current daily candle, it does not look like the 61.8 will have a substantial impact at this point. It looks like the candle has more value than the fib because of its relative decent close. But that's only valid for this week. All right, so looking for pullback and upside on the euro dollar up to the 78.6 fib. And we'll probably, in that case, see a double divergence on the hourly. We might even, that could take a while because we might see, the 4-hour go back here, and then we could see a push up, and that will create divergence on the 4-hour, perhaps something to keep an eye on. All right, pound USD. Wasn't a big fan of trading it, but in my wave analysis, I was showing this potential break, and that breakout was with a lot of momentum. On the 4-hour, everything is still in a triangle though. And you can see that we had momentum to the downside, but this is a contracting triangle waiting for the Bank of England tomorrow. All right, pound yen really didn't do much yesterday. It was just, banging its head against the 61.8 fib, which it couldn't break. It couldn't break this support trend line, and it really didn't do much. It's basically potentially showing an inverse head and shoulders. And my cat is saying hi. If you heard that in the background, she is a big fan of the pound yen. She likes chasing fast objects, and the pound yen is certainly very fast. So that's why she's a big fan. And but it wasn't fast yesterday though, and it is in an interesting spot. I think that a break below the 61.8, we could see a similar move like on the dollar yen. We could see a potential to the 78.6 fib. Contrary to that could be basically this resistance line. If it breaks that with a good candle, I would be looking probably, maybe even the hourly chart could be good. An hourly candle above this trend line, and I think we could see a hook back and follow through to the upside. Now, to me, it seems more like a bouncing spot due to the fib. 1, 2, 3, 4, 5 candles not breaking this low. The relative corrective channel compared to this impulse. Now, of course, we do have strong impulse to the downside prior to that, and that's sometimes when momentum and correction can be tricky, because what momentum is more important? And the answer is they both are important. In fact, both have value. In that case, in these scenarios, looking at the breakout is important because if price breaks to the downside, the bearish momentum is most important. If it breaks to the upside, then the bullish momentum has an important role too. So I use both momentums if it's available, if it's visible. I use both of them. All right. All right, so let's take a look at the next yen. Euro yen basically, did make the breakout yesterday, but the thing is that the wick here was pretty big. I think it was more than 30% if I remember correctly. Let's see, 100 pip candle. Yeah, it was just like 31%. So the dollar yen was better from that point of view. But anyhow, it was close to 30. It was really roughly around that zone. And this is one that is probably still okay, but it's close to the border. And it did get a follow through with a couple of candles still breaking below that, breaking this trend line, and price making a downside. So I have a fib that's bearish, but from that point of view, I can use this fib to take a look where the retracements could be. We stopped at the 50 fib. Next target would be the 61.8. It's a bit shy of that, so it looks like it can make one dip down to hit that 112.75. There's not a lot of space there, but that's what seems to be left at this point. On a 50-minute chart, we talked about that yesterday too. We saw that it's good to trade the break of the pattern after the break or the pattern after the pattern. And here we got the break, and you see a small little triangle right there and the break of that triangle. Those are always lovely. Those are the best ways to trade it in many cases. The 4-hour candle is a great confirmation, but from a tactical point of view, trading these patterns after the patterns are really very nice. You could just put fibs like this and look for the target, and you can see a straight move down to the minus 61.8 fib. All right, at this point, the price is basically making another break of this trend line, kind of hooking back. But considering the small target left, I don't think it's very, very interesting at this spot. Maybe a bullish bounce at the 61.8 could be more valuable, but then again, we did break this trend line, and we're not sure how far the downtrend, the breakout can last, so that's a bit risky. I would probably rather trade it below the 61.8. If it manages to go down, make a bear flag at the 61.8 and then break that flag, that would probably be a better zone right in here, between the 61.8 and the 78.6 fib. All right, the Aussie hitting the target that we're talking about, considering the bounce, didn't get to the second one though. I'm not a big fan of this Aussie at this point. It's a very, very, very tight triangle. All right, dollar CAD made a bounce at this level, but didn't break the support, as you can see. All right, let's move on. Now the cat, I was a bit distracted because of the cat, but the cat has moved to a new room. So let's take a look at some other pairs using momentum and correction. Euro odd basically had the breakout yesterday. We saw a continuation. All right, on at the beginning, but then we saw basically the turnaround yesterday afternoonish, and strong momentum followed through back down. All right, so there was probably divergence between these tops, and this is looking like a first correction, a first momentum correction of a bigger correction. All right, this overall looks still corrective when we put a channel like this. As you can see, and I think there's potential for price to go back to the bottom of this channel. Sometimes when you look at this, things become a bit blurry because on a daily chart we can see that price broke resistance and that it's bouncing off support and that there's actually space still to go up to higher resistance. So from this point of view, the upside looks more desirable. Then again, this channel is very, very modest and shallow angle, right? Plus we have momentum going down that's pretty strong. So sometimes when you analyze charts like this and you look at the market structure, they could be very conflicting signals. And if that's the case, sometimes it's really best just to stay out. And in this case, it might be best to do so. But I do think that considering the strong momentum, typically you'll see an ABC zigzag, and there could be a chance of a turnaround at the 61.8, make some head and shoulders, and price to move back to the bottom of that channel before it bounces up. All right, it's a risky one though, and probably not the best one because of the conflicting signals we're seeing. All right, so let's move on. All right, Euro New Zealand. Euro New Zealand had a pretty good candle here. We were talking about this candle yesterday too on the Euro New Zealand, right there. That candle closed pretty well, retraced. So if you put a fib on that candle, right, you can see clear momentum to the downside, corrections to the upside. All right, so this could have been again a breakout to the downside, and that was a good candle. So if we put a fib on that candle, we see an easy retracement to the 38. It went deeper, it went all the way to the 61.8, right? And that just was shy of this target. Now, I was saying it depends what target you want. If you want conservative, always aim for the bottom. If you're looking for more aggressive, well, not always, but at or above the bottom. If you're looking for more aggressive, below the bottom. One of the disturbing factors of this trade was this bullish candle. right? That was already a warning signal. Um, then there was still a hope for this bearish candle, but with a combination like that, you want to limit your risk, move it to break even, because first of all, this bottom was not broken, and also the bullish candles, a bullish candle like that is certainly a strong warning signal that something is perhaps showing some danger, right? And you want to limit that risk. That is trade management. This was a good entry, but you want to be flexible with your trade management, and you want to see continuation relatively fast, and you don't want to see candles that are strongly opposing the direction you're trading, or at least that's how I look at it. I'm not saying that it's impossible to stick in a trade where you have any opposition, but it's good to find that balance. I think this candle was too strong, I think. So moving it to break even, reducing the risk on that short was the best play in retrospect, but also when you just take it candle by candle. All right, so I think now we're seeing more momentum to the upside. We're seeing a potential break of this trend line. We have part of that candle already poking through this resistance. The next candle would be a real breakout. This is looking like we are basically reverting back into upside momentum. So if we zoom out, we see that momentum was here, and that this actually, in a bigger picture, looks more like a correction. And that's how you can basically, of course, see how relative everything is, because here we saw momentum, correction, momentum to the downside, correction to the upside. But relatively speaking, this entire swing, right, because this swing high, swing low is composed of various swing high, swing lows. Within this green piece, we had faster downside than upside, right? So it seemed correct momentum to the downside. But if we then compare this swing high to this swing high, swing low, then we see that the first one was a lot more aggressive in its upside than the second one to the downside. Right? So that indicates that the resistance, the break of resistance, could spark some momentum to the upside here when you look at this combination. So this is how you can combine momentum and correction, look at various time frames, look at various legs, and you kind of prepare yourself for or prepare your trading plan for the next best move, the next best trade. From this point of view, therefore, there could be a breakout to the upside. But the question is, what time frame could be the best one to trade that? And from my perspective, I think daily chart in this case makes the most sense. An hourly chart, mind you, could still be okay, but this trend line is quite a long, quite a large trend line for an hourly chart. All right, we have candles above it, so yes, that is okay. But the stop loss would really, you cannot put a stop loss here. It's too risky. Got to go below the bottoms here because it could move up, retrace the trend line, and then move up again like that. All right, now the 4-hour might be okay as well. If we get a good candle like that, it could be good too. But same thing with the stop loss though, below this bottom. All right, so that could be good too. The other option would be the daily, as I just mentioned. In that case, I would like to see, well, let's say if the day candle reaches up to here, like that, that looks like a good breakout candle as well. That would be another way to do that. We get a good blue candle. We would expect the price to retrace to the 38.2 fib, see a bounce at that fib and continue upwards. It doesn't have to go to the 38. It could just make a sideways correction on a 5 and 15-minute chart, hit the 23.6 fib, and then have a breakout already. So the breakout on a lower time frame would be the alternative to catching the continuation. So if we have a candle like this, for instance, either the 38.2 fib retracement or sideways breakout, and we should see follow-through candles like that. If we get this, in that case, we can put a fib from here to here, and we see a 50 fib bounce, and the 272 target is the main target. All right, then we should see, what, and then we can of course look again at the higher time frame and say, okay, what is this? We got momentum here, we got correction here, as we already said. What, this momentum, if it, what would that basically mean? Well, it depends how far price goes. If it only goes to the 272 target, it's probably an impulsive correction, and it's looking more like an A, B, C correction, because ultimately we see a downtrend prior to it. And this could be a resistance spot for a renewed downside, right? But if it extends, if this third C leg really goes far, and it just stops at the 272 target and then goes up to the 61.8 target, and it starts building triangles and bear flags like this and keeps pushing higher, then it's actually starting to turn into a 1, 2, 3. It could be that, and there could be a lot more upside, right? Waves 3 are very impulsive, they can push higher. So that's why it's important also to see how price responds at these targets, because that will give us information about whether continuation upwards is likely, if there's an impulsive reaction at the 272 target or at the minus 61.8 target, and then we see corrections sideways, more downside is actually likely. All right, so does that make sense? I mean, do you see what I mean with regard to how various momentum and corrections can be pieced together, and how that reaction, how the reaction also gives us information about what the next move could be. Okay, great. Well, if you have any questions, of course, feel free, as always, to let me know through email or through chat right now. So yeah, this obviously is a pretty good space. It's a daily chart. So now, although there's a decent chance that this could play out, as I say right here, but then again, things can change. Things might develop differently than obviously than what I'm picturing right now, and that's why we have to also be practical and be ready and flexible to react to changes. As we get more information regarding the development of this piece up, we might conclude that although the target at 2722 was the ideal exit spot, there could be things that make us want to change that. For instance, we see a push up like this, then we see a correction as we expect, okay? And then we see another push up like this, right? But the push up is slowing down, right? It's slowing down here, and it looks like it's an ABC upside here, like this, right? We're seeing pretty strong upside here, but we saw basically pretty strong here. Do we see ABC here? And this piece is actually showing more hesitation to the upside. Well, in that case, we want to seriously think about our target and probably adjust that, because, or at least trail stop it. And the reason is because this could turn out to be a bigger correction that goes down to the 61 or 78.6 fib before price makes that move up to the targets we already had originally in mind. Although there's a good chance that the 50 fib will be the bouncing spot, it did stop at earlier fibs, and those were not the bouncing spots. Well, they were bouncing spots, but they were not. I mean, price still went below them, below those levels, to retrace further down. The same could happen to the 50 fib, despite the trendline break that seems to be appearing right now. And that's always, of course, something you want to be aware of, that this could expand like this. And we could see basically price failing up in here. So when we see that type of movement, you would typically see price basically respect this fib from top to bottom. And it will stop somewhere around the 61, 78.6 fib most likely. There would be basically a three-wave motion. There could be divergence between these tops. There will be things, and you'll see probably a reaction at the 78 or 61.8 fib. You'll see on the lower time frame, you'll see momentum kick in here, right? You'll see a decent push down on the hourly chart, and you'll see a correction like that. If that happens, there's a good chance that the price could fall down to that target, in fact. But we have to be aware that that again could be a turning spot for upside. So it's just to show you how, when, why you always want to have a trade management that is not giving up on a trade immediately, as I say often, but also not, let's say, not sticking to a trade needlessly long. All right. So we got some questions here. We can take a look at another pair, of course, after this. Typically, I do fib both ways, indeed. It really depends, or sometimes I have both on the chart. Like in this case, we have a breakout to the upside, but I still have a fib to the downside. Why is that? Because of the reason I just mentioned, that these could still be resistance spots. Then again, we have a breakout to the upside, so I'm also interested in seeing this fib for the reason that I want to know where the targets are as well. And the same thing would be valid that we could also put a fib from here to here, because I would like to see where there's confluence, basically, between targets and retracements, if it does make the move up. And in that case, let me just remove this one. And we will try to see if there is confluence. And you can see, that there's the target here. The target's nicely aligning each other, lining up between the 50 and the 272, minus 272, and the minus 61.8 and the 61.8. Let's see, what are the numbers referring to? I think you're talking about these, must be these fibs, but if not, let me know. And these fibs, well, these are ratios, fib ratios, basically, and they show support and resistance levels. So that's the very quick answer. The bulls and bears, but if I probably mean, I'm not sure what you're referring to, so maybe a follow-up would be better. Bulls and bears are in control. Yeah, sometimes it's not clear, we got momentum in both ways. And I think that is very, very true on the pound at this moment. Yes, we got a downtrend going on, but this is a pretty strong momentum, which could certainly see follow through. So for me, I really don't have any. Obviously, there's a lot to say for the downside, and probably still has a advantage. But in some cases, you can really see that the breakout is important, or the break, not to trade it right away necessarily, but just because price is showing consolidation or showing momentum to both sides. Obviously, when, for instance, this channel to the upside here, like that, you got good things going on for upside. You got 4-hour. Okay, it's not a great trend, but it is an uptrend on the 4-hour. You have an hourly channel, and you have momentum to the upside. Well, then trading it to the upside, in most spots would be good. So some time frames, some currency pairs are certainly have more clarity than others. That's just how it goes. And that's why that momentum and correction is important, but it's always good to use candlesticks and trend lines and moving averages to understand, which what move we can expect next, and what is worth trading. On New Zealand, let's take a look at on New Zealand. All right. So monthly, monthly we definitely see a bearish momentum, but we also know that price is at support. So, that's why obviously momentum correction is only a part of the equation. Yes, we do see downside momentum, and we do see at this moment basically price um, showing some momentum here to the upside too, right? So we see downside momentum, we see upside momentum here, and we see basically some kind of correction going on, probably on this time frame at least right now. And from that point of view, there was reason to see a pattern like this, which is a reversal pattern, which is an inverted head and shoulders, but price is broken below that. So that does not look like it's playing out. But ultimately, it is in a strong support zone still. And even if this is still part of a correction, we could see basically, we do see 5 waves down here. But that doesn't mean it could not make, for instance, an ABC like this to the upside. So considering the strong support levels that are here, we could see a bounce as we retest this bottom. All right, on the weekly, once again, this momentum is dominating, and we see basically bearish momentum here, correction. So what could happen is that price retests basically the bottom and this target. Considering what this looks like a correction after momentum to the upside, it looks like price will actually use the target for a bounce at support. So that's something I think that at this point, a bigger ABC zigzag to the upside to correct the downside still seems most likely, right? We definitely see the bearish momentum in play at this moment, but despite that, it seems like an upside, or at least a triangle of some sort, or at least a correction up to retest resistance, if not a bigger upside, seems the most likely. Now that would change, of course, if price breaks through this bottom. All right, on a daily chart, you can see here basically price making an ABC zigzag up to these fibs. And if we put a fib on the most steepest part of this swing high, the steepest momentum part of this daily chart, we can see price respected this fib and has a target down in here. All right, so it does not have to get necessarily all the way there, but that's the main target for the moment. So I think a break of this bottom seems likely, but that it will bump into support basically. And what I would be looking for is a reaction down in here, a bullish reaction. If we do get it and we see a correction like that, there's a good chance of a strong reversal after that. All right, so the green circle will be an early entry, a bit dangerous because that's the first kind of potential turnaround spot. The blue circle is a bit better because then we already have the confirmation of momentum in the upside on the lower time frame. All right, so that's basically always interesting. If you see 5 waves on, or you see momentum on a higher time frame, what one could do is look for the first reaction when we expect the 5 waves to be completed, or the fifth of the fifth even. And if we look for the first kind of momentum twist to the opposite side, and then look for the first correction, that could be a interesting way of trading reversals. But you want to make sure that there are good reasons to expect a reversal there, like strong supportive resistance, confluence, because you might underestimate the strength of the trend if there is no confluence. You don't want to do this at any spot, at every spot, because strong reversals are not that often taking place. All right, so I would like to see a bullish reaction at support on the lower time frame, like the hourly or 4-hour. For the moment, though, considering the strength of this momentum, it seems like we'll get a follow through. Now that would certainly be out of the window. If this is a wave one, if this is an ABC zigzag back to support, then price, and this is within C, this is a 1, 2, 3, 4, 5. All right. then typically wave forwards are shallow, triangle-like patterns that do not go into wave one. So any push that goes into the 78.6 fib or above it invalidates the downside. And in that regard, if we get a push up like this with momentum and we see kind of a triangle being built here, that would lean itself for a good breakout at the green circle. All right. The second option would be if it builds a triangle here, that would lean itself, that would make a good breakout to the downside for that last push down to here. And then if there is momentum, there could be a good buy at the retracement. So what I see basically is a breakout to the downside after a triangle, a bullish break of the resistance after momentum and bull flag, or a buy after it breaks for a lower low, momentum up, correction down, and that could be a buying spot too. All right, so those are the very big time frame kind of ideas. Now, obviously, of course, this changes if price breaks to this bottom. On a lower time frame, we now know that there could be a good reason to expect a consolidation here, perhaps a breakout lower. If it does break higher, then there could be an ABC zigzag or reversal actually going on, right? So let's take a look at that then. This is actually a pretty aggressive move up for a wave forward retracement, to be honest. And what could happen is that maybe the wave C is completed already. So let's analyze this upside right here a bit better. All right. There we go. Let's see. This is, yeah, it's pretty impulsive. And it looks like a good push up with 5 waves. So from that point of view, I don't think we're going to see an immediate break to the downside. I think that at the very minimum, price is going to stay, make a triangle. If not, make a zigzag up, all right, to the 61.8. That would not invalidate the wave 4, by the way. It's untypical, but would not invalidate it. So, yeah, I'm not expecting, at this moment, not expecting a break of this trend line as yet. What could happen, all right, let's put these trend lines on the 4-hour chart now. All right, there we go. If it breaks the resistance, there could be a breakout trade to the 109 level, right? As basically a bigger consolidation or bigger correction of the wave 4. And that could be an ABC, like this, zigzag. If it respects the triangle, then it's possible. I don't want to rule it out, but then there could be, if we do see a bounce here, there could be a move back down to retest this bottom. I would expect another bounce back up, and the next time we might see a breakout right there of the support trend line at the red circle. So, on the 4-hour chart, I think ideas for trades are the breakout, the bounce at the target, the bounce at the top of the channel, probably the second one better than the first, to be honest. I wouldn't take this one. And the breakout, the bearish breakout here at the blue circle. All right, so these trend lines basically offering breaker or bounce trade ideas, to put it simple. On an hourly chart, okay, price is a bit halfway, but you can see that there's momentum already, that took place here, and there was slow downside here. So there are things to look at when you see something like that happen, right? You can put a channel like that, you see momentum, even on a time frame like this. You don't need the monthly chart to do that. You see an hour impulse, and on a 50-minute chart, you see a correction like that, and you got a breakout candle, and boom, you got a trade going your way, right? So let's, the 4-hour world and higher is every time frame basically has its own kind of mini world in a way, and you can see how correction and momentum occur on all time frames. So that would have been a good trade on the hourly, for instance. Now, at this moment, let's take a look at lower time frames. Looks like the price is actually making a pretty neat channel to the upside here. Top is not so good. All right. And you can see break, pullback, continue. And it looks like it's breaking right now as we speak, in fact. There's another trend line right there. There's another trend line right there. And it looks like a momentum continuation. This is a channel to the upside. We've got momentum to the upside. We know that there's a chance that price could make a bigger triangle. So from that point of view, a move up to resistance makes sense. We got good momentum candles on the hourly chart. So despite the fact that, there's on the daily chart, there's good momentum here to the downside. At this point, it seems better to trade it to the upside to resistance than to trade it down. We do want to be aware of the role that this resistance has up in here, and that could certainly be a spot that price could respect and stop at. This is 3, 4, 5th candle on the hourly chart. So I would like to see a continuation soon above this top. Otherwise, it could maybe make a bigger consolidation zone. But for the moment, there are various ways of looking at it. This hourly candle, if it closes bullish, small retracement, and I would expect to follow through next hour. On a 50-minute chart, a candle like this would be a breakout, for instance. We already had a breakout candle here. This would be a second breakout of a bit shallower trend line. And it looks like a breakout is occurring right now. So yeah, there's various ways it could be traded on a 5-minute chart, for instance, with an entry, even right here, right? The stop loss below this bottom. But I would like to see if on a 5-minute chart, I would want to see a continuation in the next 1 hour and 10 minutes until the next top of the next hour, because otherwise it's taking too long. All right, for the moment, we see momentum to the upside here and here and here. So it could be another one. The thing is that you want to be aware of is that after a couple of pushes up or a couple of pushes in one direction, then at one point we're going to get a bigger correction. Doesn't have to be now, but the longer it does this, eventually it is going to make a correction. So that's something you want to be aware of. Like for instance here, we had a break, a break, a break, a break, a break, but this one finally made a bigger bounce. This one actually, with the arrow, wasn't a bounce, it turned into a reversal on this time frame. All right, so looking for candlestick confirmations of breaks, always very useful. You can see 50-minute good candle. So let's see if this is a good candle or not. If it is like this, closing at the top of the hour in 7 minutes like that, then it has a whole hour to basically retrace a bit perhaps, but then continue and break this top. it looks like engulfing twins here on the hourly in a channel to the upside. Stop loss would have to be at least below these engulfing twins, and ultimately got good bullish candles that are starting an impulse to the upside. So for the moment, there's good evidence to see a continuation up to resistance. That's my take on it. I don't trade the odd New Zealand much at all, but this is what I would analyze. All right. Well, do you have any questions at this point? Anything you would want to follow up on? DAX. Let's see. We see. Yeah, yesterday we were talking about that this was a bearish candle, probably going to get follow through on that, and it did. Price making shallow retracement, barely missing the 38.2 fib, getting a downside again. And looking at yesterday's candle, I would say one more bearish day probably, or at least a push, an intraday push lower. And we're not sure how this daily candle will close, right? But yeah, it could certainly be get that follow through as we're already seeing right now. In fact, look at that. So definitely momentum to the downside. We got momentum correction, momentum correction, momentum correction. So this is definitely momentum. Now, how far will it push? How far will momentum push? It could do that for a while. It could do 4, 5, 6 times. Eventually, there's going to be some correction though, and this momentum will die out. Let's say, and that typically happens 5 to 6 candles, not breaking a low. That's when we get some type of more aggressive correction, typically. For the moment, you got lower lows mostly on this 4-hour chart. So if we get another candle close like this, it seems set for maybe a correction, but it seems set for more follow through. To be honest, how far could this initial momentum go? As I said, it's always difficult, but we can use support resistance to have an idea, and maybe the 38.2 fib here at this support level. That's maybe how far the first initial push could go. And this could be only a first push, then we can get a correction and lower again. For instance, that's possible. It depends. But for the moment, it seems destined to, considering momentum, to fall a bit further. Silver. Silver, good momentum to the upside at this point. Looks destined to follow suit and continue with that momentum. There's nothing at this point says that downside is prevailing. You got correction sideways, momentum prior to that, and you just have a consolidation at this point. So yeah, this resistance point could be difficult to break. And what could happen is we're seeing break after break here to the upside, right? We see an ABC correction, and we see a break, and a break, and a break. But it doesn't mean it has to continue right now. What could happen is it breaks this channel, expands this correction back to support, bounces off of that, and then makes a bigger rally. So definitely keep an eye on this channel, right? Definitely keep an eye on the bottoms here. And if price breaks through the support, there could be a correction back down to support. If it stays in this channel, it could continue higher again. And in that case, there could be one more breakout above this resistance to retest this top. But I wouldn't want to trade it right into that top. I wouldn't want to trade it too close to the top, because that could be, of course, a turning spot for correction, a simple correction back to support before it moves. It does break above that top. If it does break above the top immediately, with a good daily candle probably above it, then it looks destined for breakout to the target at 2250. So, for my opinion, a mini breakout here above the small resistance, right, could lead to a follow through to the top, but then I would like to see a daily breakout candle above the top before continuing trading that. Otherwise, if it doesn't break, it could be a bigger move, a bigger correction back down to support. All right, so that wraps up our webinar, I guess, for today. Hope you have a bit more understanding about momentum and correction, especially, and hope to see you in the webinars. Then it's going to take a look at naked scalping part 2. We're also going to take a look at trading with Renko bars tomorrow. So looking forward to those. And thanks for being here. Thanks for those questions. It's always great to have your thoughts and ideas and questions. And wish you great trading. Cheers, folks.